Good everyone, Les here from BG Trading. Hope you are well. Today is the first day of new financial year, FY25. And this video is about our expectations towards the market S&P ASX200 for this financial year. How are we going to be playing the upcoming reporting season as well? And the best sectors that we think are currently offering value if you have a little bit of patience and want to play into the high quality stocks. Let's have a look. Just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks together with our VP members. We aim for 20 to 40% and stop losses of 3 to 10%. So if you like the way we trade, I'd like to invite you to become a subscriber in this channel and also take a look on our Facebook community, Buy, Grow, Sell Strategy for Share Traders. We post a lot of great quality content in this community, including some stock analysis, access to exclusive reports that we post on a weekly basis, and you can even drop the stock that you would like us to analyze. If the stock is within our modeling offering a potential buying opportunity, then we are going to be looking to and bringing to this channel. Let's take a look now. I put together this article about the upcoming financial year. I want to share a little bit with you some of the key metrics that we're going to be looking at from now to the upcoming month. Within the market, ASX200 will be playing now we focus into a few key elements. First one is inflation, which is still very unstable, still higher than expected here in Australia, which ultimately has been affecting negatively stocks like local growth stocks. And then also the fact that we have a US election ahead, and then there is always a bumpy road ahead of US election. Although we think it doesn't matter which president US ends up selecting, the stock market should do its own thing afterwards anyway. As you saw, like Trump lost the last election, everyone thought the stock market would crash, and with Biden, stock market is at all times high, and then it looks like US is immune to any really presidential, depending on the party, doesn't really matter. So I think the focus really is about inflation, what's going to happen with interest rates here in Australia and in US, because depending, even though Australian interest rates could go up, but if in US goes down, that means that some of the stocks that has exposure into international markets could still outperform, and stocks that are exposed to Australian market, if interest rates goes up, then obviously it could underperform. Now we don't want to be exposed to those stocks. Now, sectors as well. What are the sectors that could do well, could do not so well? That's what we're going to be discussing here. First thing is inflation in Australia and US. Inflation continues to be significant concern both in Australia and in US. The market is 60% of the investors are looking to potential interest rates cut in US by September. However, here in Australia, still a little bit, still like 50-50 that we're going to have a potential interest rates hike. So we are playing in the opposite direction at the moment that US. The problem with this is that if you look into the S&P ASX 200, that's the effect of uncertainty. We don't know what's going to happen. So the market goes up 1 month and then goes down the next month, and then it goes up again and goes down again. So essentially trading within this sideways, since we have higher than expected inflation here in Australia, the market has been trading sideways. And if you look into the range, initially the range was just in between 7,600 and 7,900, you know, on this hypothetical support and the hypothetical resistance here. However, if you can see, there has been narrower now over the last few weeks, and that suggests that we are potentially approaching to a breakout from the technical aspect. Okay, potential breakout could be to the upside or could be to the downside. Now the problem is fundamentally the market still could break out to the upside, and I'm going to explain you in the next few moments. However, the technical aspect of the S&P ASX200 show this concerning bearish divergence here, which with those multiple lower highs there could potentially trigger a sell-off, and then a breakout to the downside. Another thing that concerns me a little bit as well, I mean, to go nuts into a high exposure in this market, is that we have this long-term moving average still trading significantly lower than the current market's trading. So 7,400. Per se, if the market was to fall around 7,400, I would be very comfortable to have a lot of exposure into the market. But now with this uncertain macroeconomic scenario, it's very tricky. Which means if you are for the short term for trading, that has been very tricky. Over the last few months, we have taken a number of stop losses, obviously to protect our positions, and very few stocks has reached the target within the last 2 months and become very hard to trade. We don't have enough ranges in most of the stocks. Now, if you look into a little bit longer time frame now, then the things could be better. So you have to have a little bit more patience at the moment, okay? And then stick with companies that has strong fundamentals. Companies has strong fundamentals are likely to hold better and even outperform. Now, you have to be into the right sector. The problem now is which one is the right sector, because 1 month inflation comes really high, the other month comes lower than expected, and then it keeps shifting. And I had actually highlighted some of the sector that I think, even though this uncertainty could still could be a good option to look into it. And this is more not only for the short term, but that's because we're seeing value in those sectors, okay? So the first one is materials and energy. Material and energy, when inflation is high, which is the case now, inflation is still too high, materials and energy tend to outperform. But most importantly, I like material and energy because most of the material stocks and energy stocks are trading at technically discounted price. Let's take a look at this. Let's go to Woodside Energy, for example, which is the leading sort of, together with Santos, the leading energy stocks on ASX. So Woodside is a stock that is trading at a significant discount price now, and shows a value for us because you see how it is discounted by about 30% from its recent highs here, like multi-year highs. And we like buying high quality companies at technically discounted price. And it shows the same shows with many other energy stocks in the same sector. Oil and gas. Now, if you look at the material, let's start with Rio Tinto, for example. Look at this. Highly discounted. It's trading under the long-term moving average, which is a green tick for us to buy. Obviously, we had the problem that iron ore is relatively low, trading at 106 US dollars at the moment. We need a little bit of Chinese economic stimulus. We need to see better numbers on the China economy in order to see most of materials, but that can happen overnight. And if that happens, we can see a rally very quickly. But most importantly, those companies are still paying dividends. The companies are still high quality businesses, as well as Rio, BHP, Fortescue. They're all stocks that are trading at a really good entry levels at the moment. And if you're able to wait a little bit, to go through this reporting season and potential towards to the end of the year, I'm very certain that we could see 20 to 40% within most of those stocks in this particular sector. Another sector that we really like and we think is undervalued is healthcare sector. Remains robust in terms of spending, and the demand has increased not only in Australia but worldwide. And there's a lot of innovation in the pharmaceutical and biotech space. So you look into a leading company like CSL. CSL still is currently trading probably technically fair price, okay? But we still, a lot of analysts are looking at CSL reaching our BGS 20 targets, $320. We have put this target when the stock's trading right below the low 200s, which that's when we decide to put the entry into our membership program. And then the target is 320, but we think we think there's more value than 320. We think it could break towards 350, and then there still could offer a potential further upside on this one. Then another really nice stock that we like is ResMed, that has been recently knocked down. So we think if the stock goes under this pink line, look, the pink line is actually the long-term moving average going down a little bit. So that's a little bit concerning. Okay, so you just gotta be careful when you buy these stocks that are the long-term moving average is trading down. You really gotta make sure you buy the stock under. So for me, if we see ResMed once again, because this was a stock that we bought and has reached our target $29.95, our VIP members were able to lock in a good profit on this, and that's when we locked our profit. And now it's down again. So I think because the long-term moving average is down, I think if you have a little bit of patience, we could see ResMed once again between $24 to $26. Anything under $26, I think is value here. And I would not hesitate to buy this stock at under $26. But not now. I think we need a little bit more patience and then wait a little bit more for this particular stock. Now, another sector that you guys might gonna kill me for that, but I think still offering strong value in some of these stocks is retail. Retail got knocked because if you look, let's take a look at Harvey Norman. Harvey Norman is one of the retail leading stocks. We traded that. It reached our target, and it started going down again. But look at the long-term moving, the long-term trend here. It's a high quality company. It's not only exposed to retail, but also to property. So they own a big portfolio. There is a stock analysis on our website if you are interested to take a look. All right. So I think obviously it's going down still. So it could go under $4, yes. But I think if it eventually goes around like $3.80, this sort of level, I think is a buy. Have a normal, and then wait a little bit, because as soon as interest rates start coming down here in Australia, and then you can argue, oh, it's gonna go up in August. It could, but the good thing is that we still have June inflation and July inflation before the next RBA meeting. So let's hope. You need to cross your fingers here that inflation comes lower than expected, and then sort of dissipate the idea of interest rate hike. However, if inflation comes higher than expected this month and next month, last month and this month, then I think we definitely doomed for another interest rates hike, and that's not going to be good for a retail stock like Harvey Norman anyway. So not for the short term, but as soon as we enter into inflationary decrease, which is not the case yet, we are going down, and then now we start going up again, and now we need to go down further. That's when we will have talks about interest rate cut once again, and that's when the retail stocks start going up again. Obviously, some of the results could be a little bit challenging for those companies, but if you look, companies like Kogan, for example, look at this. I like this one. We actually have exposure in Kogan. Look at how much it has gone down. remarkably, has gone down remarkably here. So we think entering at the current level, there's a strong hypothetical support here. It could break this support. Yes, it could if we have further increase in inflation. But looking at potential bounce here, and we well could see Kogan trading around $6.50 again. If we have inflation under control, and there's many other stocks like this as well. So just obviously, it's still 50-50 chance in the short term. That's why the market's going up and down. But for the long term, for the midterm, not even going to say long term, but for the midterm, we think it's fair to say that if interest rates doesn't go up and we have a shift into inflation decline again, we could see a big upside, huge upside for those retail stocks that has suffered the most. Okay, not a lot of analysts don't like Kogan or don't like other retail stocks, but we like it. We made money with Kogan. We make money with many others retail stocks, and we think we're gonna make money again. Okay. Again, like, this is not financial advice. It's just sharing how we do our trades, how we perceive the market. But in the short term, we could see still moving sideways for quite some time, and then expecting a breakout in the last quarter of this financial year. Probably not in the next 3 months. Going to be a bumpy road again because we have a report season election in US, but we could see a rally in the last quarter of calendar year 24, between October, November, and December, same we had last year. Okay, that's our thoughts going towards into this financial year, guys. Let us know what you think. If you agree with us, if you don't agree, what you think about the stocks that we have mentioned. You have any other suggestion about stocks? That's how we play here at BG Trading. Thank you very much, and I'll see you in the next video. Bye.